Good morning to you all. Okay, perfect. All right, so as we spoke yesterday about this, those of you that were in the room, did you see yesterday's recording? Okay, perfect. Okay, so yesterday we spoke about market trend and support and resistance confluence, and today we're going to speak about more technical confluence, but right now we're going to use not just support and resistance confluence, but we're going to confluence that with trend lines as well. And then before that, we're going to speak about the types of trend lines that there are. Okay. And then right at the end, I'm going to show you guys the statistics from the system that we created for you guys. All right. Again, this is being recorded, so after the webinar, the recording will go out as well. How do you guys like to receive the emails? Do you want to receive them a couple of hours before the webinar itself, or do you want to receive it the day before? Because I see that the attendance today is a little bit down as opposed to yesterday. At least 1 hour before. Yep. Okay. So even if I send it, to you guys the day before, okay. So to get everyone perfect, we'll send it the day before, and then we'll send it a couple of hours before, just as a reminder. Okay, perfect. Okay, so right now we, first of all, let's talk about the types of trend lines. So as a type of trend line, obviously we can have them in a downtrend, we can have them from the tops, right? Or we can draw them from the bottoms as well. And as you can see, this sort of drawing from the top and the bottom at one point gives you an intersection. And if this intersects with a support and resistance level, something that we actually spoke about yesterday, you actually get very good confluence when the market's actually going to turn. So in a downtrend, we can draw two types of trend lines, which is from the top and from the bottom. We're not going to go into trend channels because that's just a whole nother deal that's like an entire course on itself, just on trend channels. Now, on an upward trend, obviously, since on a downward trend we draw it from the bottom and the top, obviously it's going to be the same in an upward trend as well. Let me find a proper upward trend. Okay, so this is like a proper upward trend. So as you can see, if we draw them from the bottom, they line up quite well until it gets broken and then retested in a way. Then if you draw them from the tops, like this sort of thing, see, after it put in a double top, because this was a very, very aggressive trend. If we were to draw them from the top right here, you can just see that it just goes into space, and we got to be a little bit more realistic. Price is not going to keep this up forever, obviously. So we chose the first point where it actually did a double top and actually started to stagnate, where we could choose 2 points. And as you can see, the rest of the points are actually hitting it quite well until obviously it broke up above it a little bit and then it just started to fall. Now, I'm not sure if you guys saw it before, but here it is again. It's very close to the intersection where price actually starts to drop down and just completely change direction. This is actually a chart pattern. It's called a wedge. And yeah, But that again is another course, entire course on just chart patterns, because there's a lot of them and there's just a lot of different ways to trade them. Okay. Now, I'm just going to go through the market and do some technical analysis like we did yesterday, and I'll show you guys the confluence. Oh, went too far. And I'll show you guys the confluence that we can get with the structure and with the support and resistance levels. Okay. Okay. So first of all, again, we're in a downtrend. Now, the best way to draw these lines and the way we actually like to draw them is from the top in a downward trend and from the bottom in an upward trend, because it gives us really, as we spoke about yesterday, it gives us that confirmation when price actually breaks up above it. So we have two potential trend lines here. One that's going off the highest high of the day and then on the first retracement, and one's from the first retracement to subsequent retracements. So we wait for the market to keep pushing down, obviously. And as you can see, after it bounces off a support level, these would be a good entry, but if you draw them from the top, from the very highest highs, as you can see, it's actually it's a very lean trend line. So this sort of situation doesn't really help you that much for an entry, because most of the move is already exhausted, especially if it's just going to be a retracement, not necessarily a complete turning point. But in this sort of situation, if we would have drawn them from the bottom, you can see that we have a potential intersection with the structure support level and the trend line as well. So as we mentioned yesterday, as I mentioned yesterday, what we try to use trend lines for is actually oblique support and resistance levels. Okay, so we'll keep moving forward. Nothing from the tops just yet. We can draw these. And as you can see, even if we drew the trend line from the top here, see how well respected that was. The moment it broke above from this major trend line, actually we'll make it change color so you guys can, so it sticks out from the rest of the colors. We'll make it chartreuse. There we go. Okay, got rid of all the lines. Naked chart, a lot better. Okay, so as you can see, if we drew them from the top, once the trend line was broken, it actually got retested and then drove up a little higher. And then as price was failing, it retests it again, breaks through it, retests it, jumps off it, breaks again through it, retests it. So this really is acting like a structure support level. There you go, right there, another jump. And we'll see it come down. No, not just yet. Let's turn some of these levels on. And notice the intersection, how when price actually penetrated the actual trend line and it hit a fib level, it actually bounced a little off it as well. So unfortunately, price didn't come back to this level to actually give us a turning point. But we'll keep going through it and try to find and spot potential turning points in the market. So price is driven up. If we draw a trend line, no. And that's already broken. not really any point to draw a trend line from to be able to get some confluence there, unless we draw it from the bottom right here. But that's just for the entry confirmation that the price has hit it, come back, and then wants to drop a little further down. Okay, and I just can't stop mentioning this, but see how price is always drawn to the Fibonacci levels. So it goes up, bam, hits them, retraces, bam, hits it, retraces, and so on. Of course, not 100% of the time, but I'm sure if we turn on all the Fibonacci levels, you're going to see a Fibonacci level here as well. Okay, so moving forward. Okay, so moving forward. Not really the best place to draw trend lines from. It's consolidating market, so trend lines are a little hard to find in a consolidating market. Just been in a complete sideways trend. Look at that. See, again, it acted as a support level. So we drew it from this low to this low, and it had intersected, obviously, this low as well. Now, I know I mentioned yesterday, and I wanted to clarify this. The way I draw the trend lines is from the body, and it incorporates a wick. But when you get candles such as these, where it has literally just an upward wick and that's it, what I classify these as is basically just one big wick, because the market opened here, closed at the bottom, opened at the bottom, and then closed back up at the exact same price. So it's literally just a higher time frame wick, or higher time frame. If this would have had a 3,000 tick, that would have definitely been a wick easily. So as you can see, the level was continuously held, price came down, touched it, where you had a confluence of Fibonacci levels and a confluence of the trend line, and it just jumped off it into new highs. Okay, hopefully the day after this one, our trading day is finished. Hopefully the day after this one actually gives us some actual trading signals. No, we're still out of the trading day. Okay, so upward trend. Again, we're drawing from the lows because we're just doing confirmation. From the highs, we don't really have much to go on unless we draw it from here. Should probably delete some of these lines because they're starting to become a nuisance. So I use these highs to draw a potential trend channel, trend line, and we'll see what price does, if it actually bounces, if it gets into that zone and actually bounces off it, or if it just breaks and continues further down. Okay, so this one just broke and continued further down. And let's draw a small trend line from like this sort of thing now. Again, we only have the place for the trend confirmation trend line. And we just had another wick candle. Candles, actually, because there's actually two. So as I keep harping on about this, see how the trend line was broken, came back, retested it, and just price is starting to move up again. And price broke down again. There we go. Okay, let me adjust this properly. And a little bit down here. Okay. So in this zone, as you can see, we drew a trend line from previous highs. The trend line got broken, retested, got broken, and it's looking at a retest again with a structure support and some fib confluence as well. And let's see it jump from here. Most likely it's going to jump and do a little bit of a retracement, maybe until the 2786s. There we go. It actually surpassed our 2786s. Okay, and as you can see, price got drawn back again to the structure level. In this sort of situation, this would be interesting. This is more like a horizontal line, really. That's no structure support. So it bounced off it, got drawn to the fibs again and the low of the previous day. Keeps bouncing around in there, and we can use, no we can't. So price has failed. This would have been a good entry here. Price has fallen. Still don't have any lows to draw the trend line off. I think I chose like the worst days to test this. Okay, I see Gary's having some problems with click meeting. Hopefully he can see text. So we're going to keep going. Price has hit it more than a few times, and now it's fallen through. It's retesting. But it broke the trend line, it retested it, and now it's moving back up. Is Gary still in here? Maybe I can private chat him. No, Gary left the chat room. We actually, the people from Click Meeting recommended using either Chrome or Firefox. So if you're using like Microsoft Edge or something else, that might not work. Firefox, I've heard, is better. I'm currently using Chrome for this. Diane just said, yeah, and we're going to speak about that. Yeah, no problems, Bob. We're going to speak about that, Diane, in just a second. Okay, so as you can see, the trend lines act really as support and resistance levels, but oblique, as we said before. Got a little bit sidetracked with the connection problems. And okay, so in here we can draw another one off the highs, and the potential lows really act more in a consolidating market. The potential lows actually act more as a support, not oblique level, but more of a as a horizontal support level. So as you can see in here, it's not necessarily a good trend. Well, there's no good or bad trend lines. It's just the interpretation of them. But as you can see, this one actually created a wedge pattern, which was broken and then false broken. And I think it's going to go to the upside. No? Yes? Yeah, it got false broken and then moved on to the upside. So in a consolidating market, drawing trend lines in a downward trend off the lows and in an upward trend off the highs, it's really, really difficult to actually get a good intersection point. Not as, and you don't get them as well as you do when you draw them off the highs for a downtrend and off the lows for an uptrend. This is why we like them, this sort of trend line for confirmation. Okay, do you guys want to hear me talk about trend lines? Some more? Windows 10 Microsoft Edge, try using Chrome. Okay, do you guys want to hear me talk, go through one more day of trend lines and actually show you the power of trend lines? Or do you want me to move forward with showing you the system setting, how much it won, how much it lost, and all the statistics that we gathered for the entire year? Move forward, okay. System stats. Peter, can I show some trades? With these trend lines, I'd rather show you the trades from the system, which is going to be next week. It incorporates the trend lines. It incorporates exactly these trend lines off the top. That's why I'm going to insist on you guys going through the charts and actually finding drawing these trend lines off the top and trying to find places where they get broken. Price comes back to retest them and then just jumps forward, okay? Perfect. Okay, so let me move forward as everyone requested. Okay, so first of all, we're going to start off with the ES0618. Now, this is our trade tracker. Some of you guys have it, some of you don't. For those of you that don't have it, you're going to receive it on Monday to use for 7 days so you can actually see what we tested. And this trade tracker, basically, it shows you the entry, the stop position, and the targets, and each of the targets. So this system, just for short, it actually trades three targets. All the stops are at the same location and it trades 3 targets. Once target 1 is hit, the stop loss will be moved to break even automatically. Now let me show you some statistics. So this is for ES0618. So we started off with the ES0618 to trade. Okay, so you guys can have very, very recent statistics. So off the 3 positions total, it made $11,850 with a profit factor of 2.69 and a maximum drawdown of $2,000. Let me grab this back up. Okay, so offer. I have a basic question regarding the Fibonacci lines. If the line was not respected and totally violated, like we can see on your chart, what should we give it? Should we give it any importance? Which line are you talking about on the chart right now? Can you just give me a fib value? Negative 161.8. This one right here? Yes. Okay. Well, this one was completely violated, but as you can see, any structure or support level is and the fib lines as well. You should take them on each on the same basis moving forward as well. That's why I said don't use them by themselves. Use them in conjunction with support and resistance levels or trend lines. So this sort of thing, where the negative 161.8 was completely violated over here, even if it closed above, closed below, closed above, and then just jumped off it. As you can see, it's still respected. So price came down, it still just jumped off it. Came back down, it jumped off it again. Came back up, it jumped off it. Then it comes down and actually still uses it as an actual support and resistance line. It's just that some of the time it goes through it, but most of the time, as you can see, it actually bounces from it. So does that answer your question, Offer? So always, basically, my answer is don't disregard any lines, but always keep all lines in mind. Just make sure that you make them in conjunction with something. I see Offer's still typing, so. Yes, of course. So Offer said, if I would think that if it became resistance, it got violated. The idea it can be support. Yes, that's what I mentioned in I think it was Tuesday's webinar and in the videos as well. Any structure level that is resistance and is violated, and that's a horrible word to use for it, but is violated, then once it gets penetrated, it becomes support. Yes, broken. Thank you, Ron. Okay, so Office still typing. Okay, so in the meantime, while Office typing, let me just grab the statistics back up. There we go. So the statistics are back up. Yes, Offer, yes. You can use it as support again. So if it's broken, so if a resistance level is broken, it can be used as support. And then if subsequently broken again, a support level is broken again, it can be used as resistance. Okay, perfect. Okay, so as statistics say, we've made $11,850. I'm just going to recap this. Over the entire contract with 3 different positions. Our percentage profitable was 71.43%. And our profit factor, which is really our gross profit divided by our gross loss, is 2.69. Maximum drawdown is $2,000, which is approximately 20% of the needed account to be able to trade this. Number of trades per day, it's a very low frequency strategy, which is good because you can trade this. You can sit in front of the charts and just put on 1 trade a day, so you guys can get used to the panic. There's no other way to say it, but the panic of actually being in a trade. It's always good to trade it on one instrument to start off with, and something that's very low frequency, so you get used to actually trading. I actually have this is just for the 3 months, yes, But we have the other 9 months on different charts as well, because these statistics are from the charts themselves. So we didn't show this off the continuous contract. We actually added each contract in together. Does that answer your question, Bob? Okay. So for the 0618, we made $11,850 from the 3 positions. Now, if you don't have a $10,000 account, obviously you can just trade one position, and position 1 made $3,362.5. Position 2 made $3,000. Oh, surprisingly, it made the same amount of dollars. And position 3 actually made $5,100 approximately. Obviously, basically our target 1 is 1-to-1 stop to target ratio. Our target 2 is a 2-to-1 stop to target ratio, and our target 3 is a 3-to-1 stop to target ratio. So you can see how the percentage profitable actually decreases per position, but the total net profit actually increases. And this is after $5 commissions per trade. So after $5 commissions per trade, you're left with $4,800. And in total, you're left with, where is it, commissions? You're left with $1,100 by the end of the 3 months. Okay, now that we've gone through 0618, let's grab 0918. No, excuse me. 0918. Need to grab this chart somehow. Okay, so that was 0618. This is 0918. So in this contract, this was the worst contract out of all of them, because the market was really, really slow during those 3 months. So we didn't get very many trading signals from the previous contract, which was 0618. We had a total number of trades was 63. In this one, it's actually just 33. So the number of trades actually dropped down quite significantly. The maximum drawdown stayed consistent. The profit factor dropped a little bit, but this was our worst month overall, and we had a 63.64% profitability rate. Position 1 was in profit. Actually, all the positions were in profit for this month as well. So in total, it made $3,362 for the 0918 contract, which is the September contract. And obviously, these are just on the ES itself. And let me grab the 1218 contract. And it just doesn't want to grab my charts. I've got too much stuff on them. Okay, so the 1218 contract, this was over Christmas. Now, we didn't trade over Christmas, so we didn't log any trades over Christmas. We had just before Christmas, we took a break until after the New Year's. So there's no trades in there in between Christmas and New Year's. No, actually, no. This is the contract before Christmas. My bad. So that's the next contract where we didn't have any trades in between that time. So this one was our best performing contract. It made $13,712 with a maximum drawdown of $1,800, which is roughly still about $2,000 drawdown. The profit factor was amazing for this one. It's 3.14. Percentage profitable was just 1% more profitable than 0618, but obviously the profit factor just blew it out of the water. We had actually a lot more target 3s than we had. That's what actually made it larger. So as you can see, target 1, 41, target 2, 45, and target 3, 49. So this was the best month out of all of them, obviously across Thanksgiving and when people actually started getting back into trading. Okay, and now last but not least, the 0318 contract, 0319 contract, my bad. So the 0319 contract, we're just going to show statistics for this one as well. So this one, since we didn't trade over Christmas and basically we missed an entire month of trading, we just literally just traded 1 week of December and then just January and February really for this contract. So the total net profit was $7,025. The total number of trades was 41. Obviously that dropped down a little as well. Maximum drawdown was $1,500. So this was the maximum drawdown actually was a lot less because we traded a lot less. Profit factor was 237 and the percentage profitable was 63.41%. Now, if you're going to trade just the position one, it made $1,550 during those 2 months with a 63% win ratio. If you're going to trade just position two, that made roughly $3,000, a little bit under $3,000. And then position 3 made roughly $2,500. So do you guys have, okay, so in total, the total for the 4 months was $35,950 minus commissions. Now the commissions would be roughly about 200 trades at $5 a trade. So that's roughly $1,000 just for commissions. So that's still $3,500 for the entire year period for last year. The maximum drawdown obviously was, we always grab the maximum for the maximum drawdown, was roughly $2,000 and the profit factor was 2.51. Yes, Diane, that's what I mean. So by positions, Diane asked, by positions 1, 2, and 3, do I mean each trade enters 3 contracts and the positions are the 3 separate targets? Yes, that's correct. John, we're actually trading from 8:30 in the morning until 1 p.m. Central US time. So that's roughly 4.5 hours. So yes, you're right, 4.5 hours per day. Bob, I'll be covering the trade setups next week. I want you guys to, I'm going to send you guys the trade tracker that we use to track these trades on Monday, along with the backtest that we did for all 4 contracts. We want to get everyone installed and everyone ready so you guys can have questions by Tuesday when we run the live room. Okay, Diane asked, so when it doesn't hit the 3rd target like this one, basically what we do is after it hits the 1st target, we move our stop loss to break even because we want to cover open position profit. You know, if we already made money on a trade, we don't want to lose anymore. That's why when you look at the statistics, and I'll drag this over, that's when you look at the statistics, position 3 does have a 26.83% win ratio, but that's a win ratio from the total number of trades. It has actually 15 break-even trades. So theoretically, you're only incurring the loss of commissions on these trades. If you were to add these 2 up and actually do a statistic from them, so you have 11 winning trades plus 15 losing trades, that's 26 trades total. So 11 divided by 26, you actually have a 42% win ratio. It's just that when we calculate, it's always better to see the worst case scenario, really. That's why we have the percentage profitable at 26, but realistically speaking, it's at 40 something percent. What happens to the... Okay, and as I said, after target one, so after target one is hit, all stops are moved to break even. So for position 2, it's the same deal as for position 3. So it's number of winning trades, number of losing trades, and number of break-even trades. No, Diane, we don't. Basically, we just let it, we give it room to breathe. So we cover, sorry, Diane asked if it hits the second target and keeps going, do you move the stop to the second target? No, we don't. What we do is we just want to cover, open position profit. Offer, did you test it between 1 and 4 p.m. Eastern? Is that Eastern? Okay. It's actually, for Eastern, it's 7:30. No, we didn't test it for between 1 and 4 p.m. We are actually in Eastern Europe, and 1 and 4 p.m. in the afternoon. It's also a less moving market during that time as well. For us in Eastern Europe, it means that in Romania, it means that we are trading at night, like really, really night, like from 9 o'clock at night. And we just, in our opinion, that's a little late. And the setups really themselves are kind of cut down by half, if not 25%. What time was this run on? What do you mean, Diane? This was done in historical data, but we also trade this live. The hours I ran each day, as I said, 8:30 Central US time to 1 p.m. Central US time. Is that what you wanted to know, Diane? And plus, for you guys, yeah, okay, perfect. For you guys in the US, clocking off at work at 1 o'clock in the afternoon is fantastic, because you can go to the bank, you can go to the shops, and not have everyone be there while everyone else is at work. This was auto and discretionary. So we used our discretionary ways to draw the trend lines in the market, but the entry was automatic with the help of the RayTrader. About the same as in the back tests, Bob. Bob asked, how did it perform live? About the same as in the back tests. Now, obviously, with the system, after we teach you, and when you purchase the RayTrader, we're actually going to offer you a 1-month teaching course where I teach you how to trade this 100% with examples, and I answer all your questions. So you get this entire system set up, and we can trade it together. Diane, I'm not sure if I answered your question, but this is an automated entry. We draw the trend lines manually, but we enter automatically with the help of RayTrader. Perfect. We already have the trading plan put together. You're going to get that at the end of this 2 weeks anyway. So the trading plan is already put together, and you're going to get it at the end of the 2 weeks. Yes, that's what I'm saying, John. Perfect. Oh, yes. Yes, it is. Excuse me. And the trading plan is very detailed. It actually tells you the hours that you're going to trade, what the setups are. You're going to have some print screens in there. And obviously, you actually have the historical trades with the help of the trade tracker, with the aid of the trade tracker. You're going to have the historical trades that you can look and take print screens off for an entire week before that's completed. Yes, yes, Diane. The trading plan is going to be free with the 14-day trial. The tools to help you trade to and the teaching afterwards, that's after you and the teaching. So I'm going to show you the signal, but the teaching and the drill down and the trading with me for an entire month, that comes after. Thanks, Ron. Bob, we have not tested it on other instruments. What we want, this trading plan is specifically for the 1500 tick ES chart. So it doesn't, you can try to test it on other systems and on other instruments, sorry, and other timeframes. But what we offer and what we can support is the 1500 tick ES chart. So the trading room will start 1 week after the completion of the 14 days. So not next week, the week after, to give everyone time to purchase and get everything together. Thanks, Diane. Same. Basically, we're going to try and we're going to educate. This system roughly there's some days where you have 3 or 4 trades in a day, and there's some days where you just don't trade at all. So with this system, since it's roughly 1 trade a day, I can sit there and talk for 3 hours, take a trade, and talk for another 45 minutes, and we'd still be good. So it's educational and trading. Yeah, exactly. Exactly, John. John said you don't need to worry about each tick in the trade. Yes, that's exactly why Ron said it would be beneficial if everyone was seeing and trading the same method. That's why I said I wanted to give you guys 1 month alongside me trading, so you guys can see the setup, so you can see get familiar with the different ways to draw the trend lines and actually trade them. Sure, you can factor in. Diane asked if you can factor in a trailing stop on this. Sure, you can definitely factor in a trailing stop on this. We didn't for this system, but you can test it with your trailing stop. And what we like is protect open position profit and then give the market a little bit more room to breathe after to go hit your target 2 and target 3. Now you can test this for yourself, grab the trades and see if a trailing stop actually helped you with this, or You can just trade our method. But as I said, as I said in previous sessions as well, trading is not the same for everyone. It's good to learn a style, but then you have to adapt it to your own trading style. Because what my risk aversion might not be the same as yours. Like, I like taking my first target at a 1-to-1 stop to target ratio. You might be comfortable with just taking 3-to-1 targets. Who knows? It really comes down to what you feel and how much you panic when you're in a trade, really. And how much you can stomach, because position 3, right? Taking a look at position 3, you're only winning 26.83% of the trades. That's from total trades. Of course, about, let's say 30%, 30-something% of the trades, you're actually getting stopped out of break even. But how much can you stomach being stopped out of break even or losing before you actually crack? You know what I mean? John said, have to watch out for retests of lines and fibs with trailing stops. Yes, exactly. That's why we like to give it sufficient room to breathe. Offer, I'm sorry for disconnecting. I think Click Meeting is disconnecting me. Will you be able to send this recording early? Yes, I will try. We will try to send this recording much earlier than we did yesterday, so you guys can have time to watch it. Find what makes sense to me. I'm really seeing the channels and trend lines, how to bounce and break these areas now. Yes, exactly, and that's what I meant, Diane. Is basically every trader is different, and we're trying to teach you something that works. Are all trades closed at 1 p.m.? No, they're not. That's why we stopped trading at 1 p.m. We just let them run to fruition. Offer asked, and that's what I've been saying, Diane. Is every person and each risk aversion is really their own. You might see trend lines. I might see structure support levels. Some people might see chart patterns. Other might see harmonic patterns. It really depends. As many people as there are trading styles as well. Bob asked, is there any way you could use a better way to see your charts? Your charts keep going in and out of my screen. What do you mean? Sorry, can you please specify, elaborate on that, please, Bob? Do they close in the end of the trading day, or do they just continue until the next trading day? We let them continue until either targets or stops are hit. Some people, again, this is personal preference. We like to let each trade go to fruition because we have confidence in our trading system. Other people might like to close their, well, yes, bigger margins, but if you're trading 3 lots with a $10,000 account, your margin's not going to be more than $3,300 per lot, per contract. Most brokers will close your position. That doesn't sound nice. Yours does. Well, that's perfect. As I said, everything is tailored to each person separately. So if your broker closes your positions by the end of the day, try to look at the trades that actually go on overnight and see what the statistics are after you take those trades out, or after you take the trades out at 4 o'clock or 3:45 in the afternoon. Or actually, I'm talking Central Time, so Ron might be somewhere else, not in Central Time. I don't like trades that go on for hours or days, too much stress. I like those smaller bars, the ideas of getting in and out, so you would take smaller trades. Sure, that's a possibility as well. Actually, I forgot to show you guys the average time in trade, average time in the market per trade is 20 minutes. So this isn't This is semi-quick in and out. So this is literally day trading. It's not scalping, but it's day trading. So 20 minutes is quite well for average time and trade. John asked, so you trade past the day session close into overnight session? I don't trade. I just let my trades. I just leave my trade open and let it complete in the overnight session. That's if I think we had 2 or 3 trades really that went into the overnight session, and they send you a strongly worded email. It depends if you're very close to your margin. That's why that might be another thing. Yes, that's right, Diane. Yeah. No, we don't factor in news events because news events are pretty much market movement, except they're quite faster. That's it. That's all there is to it. Hotcom. Does anyone else have a problem not seeing all your stuff? Yeah, actually, quick question from Bob. Does anyone else have a problem with seeing the charts? Do they keep flickering in and out? NinjaTrader brokerage overnight margin is $6,000. Woo. Okay, John. Interesting. Bob, what browser are you using? The problem with news is that funded accounts should be out of the market during the news. Chrome and DSL. Try Firefox. When one doesn't work, try the other. I did, and the same. Ooh, okay. That's very weird. That means the connection's kind of poor in between us. The problem with news is that funded accounts should be out of the market during the news. Okay, that's something that we need to that you need to adjust for in backtesting. That's why I said, as with Ron, if he can't trade overnight or you can't trade news, you have to go back and tailor the system to your own trading. Ron, what's a personal? Yes, exactly. The problem is with click meeting, probably. I'm guessing the recordings come through all right, Bob and Offer, for you guys. Yeah, good. Okay, any other questions about systems, trading, tailoring your system to your own trading style and your trading risk aversion? There's 2 people typing that up. That's why I'm silent. Excited to see more details and try it out. Obviously, yep. That's why we're running this. So you guys can imagine why we ran this 2 weeks of free stuff. Is because we had so much to give you and so much to teach you that half an hour in the NinjaTrader live room was just not sufficient. Really, that was just a presentation to get this whole ball rolling and get you guys to from start to finish to actually understand and completely go through this system with us. You don't. Office said he has to say he doesn't fully understand the idea of using broken support and resistance lines. That's what you meant, yes? Yes. That's why I said don't just use just support and resistance lines. Actually use Confluence as support and resistance lines. So let's just put it this way. If you don't like using a broken support and resistance lines, you got to, this is a fun fact. The only unbroken resistance line is the high of the ES contract. That's the only unbroken resistance line. The complete high of the ES contract or the NASDAQ contract or of a stock, like the complete high of Facebook or anything like that. That's the only unbroken resistance level. And for support, it's really just the lowest value that's never been broken. Because market is drawn, fib and support and resistance lines are not magic. They're areas to expect trading and then move to happen. Exactly like John said. So fibs and support resistance lines are not magic. They draw your eye, and if you look at this, you can see that the fib got touched, it bounced off it, and then for some reason it went through it. So the market sometimes respects them and sometimes it doesn't. What we're trying to do is basically this is a game of probabilities, and you're trying to increase your probability of winning a trade, because that's what every trader says. You're going to have losers, you're going to have winners. What you're trying to do is increase your probability of having more winners than losers, or just grabbing money out of the market. Ron said, what's so great about this, Adrian, is that this is a complete system, not just an indicator, but a complete method. Yes, exactly. That's what we're trying to do. We're trying to give you not just the tool to trade, but the actual knowledge to use the tool in trading. On the same idea, I took high, low swings and extending them to the future, and it's doing the same. It's doing the same as what? They keep getting broken? I'm just waiting for Offer to finish typing to clarify. They work until they break and then they change function. Exactly. And you got to, that's the beauty of trading. And you'll see this, it's very interesting. I actually had to talk to a client today about this exact same thing. And he said he read a book about trading on this. And what is the best method of trading? And the book literally just said, there was this psychiatrist, I forget the name of the book. I'm really bad with names of different things. I forget them a lot. Remember a lot of other stuff, but names I just can't remember for the life of me. There's this psychiatrist dude whose father was a trader, and he wanted to interview as many traders as possible. And if anyone knows the book that I'm talking about, please write it in the chat. And he wanted to interview as many traders to see the psychology and see a pattern. And he had it in his mind that all the traders were going to be these confident, strapping people, you know. And what he found after he interviewed like a whole bunch of traders, like I think, I don't want to give numbers, but there was a lot of traders that he interviewed, basically was that They were all completely different, and they all found their own trading style. Some were, they weren't all strapping, they weren't all smart, they weren't all dumb. You know, it was really just, they were all over the place, because you need to find your own edge, and your own edge is where you actually feel confident in the markets. If you don't feel confident in trading support and resistance levels, then you don't need to trade support and resistance levels. Just know that they're there, teaching you. And what I'm teaching you is, be mindful of things that they are there, that they can help you. But if you don't spot them for yourself, then there's no use in forcing it. Do you understand what I'm saying, Offer? Try to find a thing that works for you. What do you mean, what were my stops? For the system? For one full point underneath the entry candle. And if the stops were less than 6 ticks, so if they ended up being 5 ticks, because the entry candle was 1 tick small, then I moved them underneath the previous candle. I think that's the one, George. I think that's the one. But Ron, don't go ahead and start putting in your head the trading system before I actually show you the trading system, because it's going to be a lot harder to try to wipe what you've already seen in the market than to just implant it freshly in your mind. Okay, Ron? Yes, that's the one. Perfect. Thank you, George. Thank you very much. So here's the book is the mental, I think you wanted to say, the Mental Edge in Trading by Jason, or was it Metal? By Jason Williams, and his father was the famous trader Larry Williams. So the average losing trade for short was $800. So $800 divided by 12.5, 64. There must be something wrong in there. Let me. Yeah, the statistics are off. $570. It depends on the wick of the candles, actually, because on some markets, so when we had the $13,000 month, so when we had the 13,000, they went off. Well, we had the $13,000 month. As you can see, the average winning trade was $800. The average losing trade was $300 and something. It really depends, and this is the beauty of these stops. And that's correct, because the average losing trade on the total page Offer said that he saw it on the totals page is because it's trading 3 contracts. So the average losing trade is 3 contracts multiplied by the number of ticks. So right now, the average losing trade is $360. And that's divided by $12.50 a tick. So that's roughly 30 ticks. 30 ticks divided by the 3 contracts. So that's roughly a 10 tick stop on each contract. Now this adjusts with volatility because we are placing our stops below the low of the current bar and above the high of the current bar, depending on if we're long or short respectively of the entry bar. What do you mean by the system trade with a limited stop on the entry? Max stop value that if the entry is more than this, the trade will open. Will not open. Sure, you can test it that way. We basically took every trade because on a 1500 tick chart, the maximum loss, as you saw, was what was it, 20 ticks per trade. So you said it was, what was it? I think $800 divided by 12.5 and divide that by 3. So it was a maximum of 22 tick loss per trade, on our trade. And our maximum stop we can incur, we set it at 25 ticks per trade. But we didn't see those sort of trades. So this was like the largest losing trade. Because on a 1500 tick chart, you know, it starts ticking away and the candles become more dense. There's more candles per amount of time rather than when you get an increase in volatility rather than the candles really increasing themselves too much. Okay, do you guys have any other questions for today? I'm glad you liked it, John. Just waiting for Raymond and Diane. Maybe Raymond has a question or Diane. So excited. Diane says, it's so excited, can't wait till I can do it all. RayTrader and the trade tracker. Well, the trade tracker is really just for showing you guys the trades and so you can see the trades. But we're really excited for you guys to start using the RayTrader and actually seeing the potential of just really set it and forget it. And that's the little boxes feature where you just enable a line and you wait for it to enter. Okay, guys. Well, for Tuesday, because our next live room is going to be on Tuesday the 9th, and we're going to send you on Monday night. We're going to send you a live room, as we discussed with the people in the live room. We're going to send you a live room link, and after that, on 2 hours before, we're going to send you a reminder. Okay, so on Tuesday, we're going to put it all together, and I'm going to show you the entry, and we're also going to discuss the system settings. So what settings do we have, and how do we enter trades? And at the end of it, you're going to get the trading plan for the Ray Retest system. No, John, we're not meeting tomorrow. We're only going to meet on next Tuesday. Perfect. Diane said, thank you so much. You've brought me so much hope that I really can be a successful trader. You're very welcome, Diane. Sounds good. Sounds good. Thank you. Cool. Have an awesome rest of your day, guys. And I'll see you guys on Tuesday when we are going to put it all together and we're going to give you the system settings and the trading plan itself. Thanks, Ron. Have an awesome rest of your day. Bye, guys.